Welcome to Booming Bull Bear, where smart traders are made. Before we dive in, don't forget to hit that subscribe button. Like this video if you find it valuable. Drop your thoughts in the comments and share it with fellow traders who want to win in the markets. The silent enemy. Why your mind is sabotaging your trades. Imagine this. You've been staring at the charts for hours. You finally see the setup you've been waiting for. Perfect confluence, clean trend line, textbook candlestick pattern. It feels like the universe has aligned. You hit the buy button, your heart pounding, adrenaline rushing. At first, the market moves in your favor and you feel like a genius. But then, the price pulls back. Your heart rate spikes. Thoughts race. What if it reverses? What if I lose? Should I exit now? Should I hold? Panic takes over. You close the trade, only to watch in agony as the price rockets in your original direction. That's not the market's fault. That's not your system failing. That's your mind sabotaging you. Here's the brutal truth. The market doesn't care about you. It doesn't care about your dreams, your fears, or your rent due next week. The market is neutral. The battle being fought is not on the screen. It's inside your head. Most traders lose not because they lack technical knowledge, but because they lack psychological control. They think success is about finding the perfect strategy. But here's the dirty secret. Strategies are everywhere. You could literally Google profitable trading system and find dozens. The reason people still lose is that they can't stick to any one system. Without second-guessing themselves, think of trading like flying a plane. The autopilot system knows how to get you to your destination. But if you keep grabbing the controls out of fear every time turbulence hits, you'll crash. That's what most traders do. They sabotage their own flight. Here's what makes it worse. Your brain is hardwired to avoid pain and seek pleasure. That means when you see losses, your survival instincts scream, "Get out. Protect yourself." And when you see wins, greed whispers, "Hold a little longer. Maybe you'll get more." The result? You cut winners short and let losers run. Exactly the opposite of what successful trading requires. But here's the shift. Once you realize your job as a trader is not to predict the market, but to execute your edge with discipline, everything changes. You stop reacting emotionally to every tick. You stop overtrading because you're bored. You stop chasing losses because you need to make it back. You finally see the truth. Trading isn't about beating the market, it's about beating yourself. The illusion of control. Why you can't predict the market but still win big. Every new trader falls for the same trap. The belief that if they just analyze enough, study hard enough, or find the perfect indicator, they'll finally be able to predict the market. And for a while it feels like it's working. They nail a few trades in a row, feel unstoppable and think, yes, I've cracked the code. But then reality hits. The exact same setup appears again, and this time it fails. Suddenly the trader feels betrayed. They think, what happened? Did the market change? Did I miss something? Was my strategy flawed? One loss becomes two, then three. Fear creeps in. Frustration builds. And in desperation, they take a random revenge trade, trying to make it back. You already know how that story ends. The truth is simple but hard to swallow. You can never predict the market. Not with indicators, not with news, not even with the fanciest AI software. The market is a collection of billions of human decisions, moving in ways no one can control. But here's the liberating part. You don't need to predict to win. Think about a casino. Do casinos know which person is about to win at the roulette wheel? Of course not. They don't care about the next spin. They care about thousands of spins, because over time the odds guarantee their profits. That's why casinos are billion-dollar businesses. Professional traders think the exact same way. They don't need to know what happens in the next trade. They only need to know that their edge, applied consistently over hundreds of trades, will pay them like a casino. That's the shift amateurs never make. Here's a story that drives it home. Mark Douglas, in Trading in the Zone, said he could publish his trading rules in a newspaper, and 99% of people would still fail. Why? Because most traders aren't prepared to accept uncertainty. They crave control. They want certainty. They want to be right. But the market doesn't reward being right. It rewards discipline, consistency, and risk management. So here's the mindset shift. Stop asking, will this trade win? And start asking, Am I executing my plan flawlessly regardless of outcome? That single change separates amateurs from professionals, because when you stop trying to control the market and instead focus on controlling yourself, you remove the biggest source of stress and inconsistency. Remember this: you don't need to know what will happen next to make money. You just need to follow your edge over and over until the probabilities play out in your favor. In the next chapter, we'll uncover how the pros actually think differently, how they've rewired their brains to trade like a business, not like a gamble. And once you understand their mindset, you'll never look at the markets the same way again. The professional trader's mindset: thinking in probabilities. Here's the million-dollar truth most traders never hear. Professional traders don't care about individual trades. I know that sounds insane. You're probably thinking, how could they not care? Every trade risks real money, but that's exactly the mindset shift that separates amateurs from professionals. See, beginners obsess over every single entry. They stare at one setup like their life depends on it. When it wins, they feel invincible. When it loses, they feel crushed. It's an emotional roller coaster, up one moment, down the next. Pros, they don't think like that at all. Instead, they think in terms of probabilities. Let me give you an example. Imagine you're flipping a coin. You know there's a 50% chance of heads, 50% tails. Now imagine you flip it 5 times, and it lands on tails every single time. Does that mean the coin is broken? No. The law of probabilities says that over 100 flips, heads will still come up around half the time. Trading works the same way. A professional trader might lose 3 or 4 trades in a row. But they don't panic. They know their edge. Maybe it wins 60% of the time, or maybe it wins just 40%, but with big risk-to-reward ratios. Either way, they trust that over a large enough sample size, the probabilities will take care of them. Now here's the kicker. Most amateurs quit before their edge has a chance to play out. They hit a losing streak, start doubting their system, switch strategies, or worse, double their lot size to make it back. That's how accounts get blown. Professionals see it differently. They're like casino owners. Do you think a casino freaks out when one lucky gambler wins $10,000 at the blackjack table? Not at all. They smile because they know over thousands of hands, the house edge guarantees profit. The professional trader's edge is the same. 1 trade means nothing. 10 trades means nothing. But 100, 200, 500 trades, that's where consistency shines. Mark Douglas said it best in Trading in the Zone. Anything can happen. You don't need to know what's going to happen next in order to make money. That's the mindset of probability. So here's the practical takeaway. Stop asking, will this trade win? That question only feeds your emotions. Instead ask, did I follow my rules flawlessly? Because following your rules is the only thing you can truly control. When you shift into probability thinking, you remove fear, you remove greed, you remove the need to be right. And ironically, the less you care about being right, the more money you make over time. Now, once you start thinking like a pro, the next step is to build rock-solid confidence in your edge. And that's exactly what we're going to tackle. Building bulletproof confidence, trusting your edge. Every trader wants confidence. They want to enter trades calmly, hold positions without panic, and exit without regret. But let's be real. Most traders feel the exact opposite. They enter with shaky hands, stare at every tick of the chart, and second-guess every decision. Why? Because confidence doesn't come from hope. It doesn't come from hype. And it definitely doesn't come from watching motivational videos before you trade. Real trading confidence comes from evidence. Think about it. Imagine you're a basketball player stepping onto the court. If you've taken 10,000 shots in practice, you don't wonder if the ball will go in. You trust your muscle memory. Confidence isn't magic. It's repetition plus proof. Trading works the same way. If you've never tested your system, if you don't know your stats, then of course you'll panic every time the market moves against you. But if you've backtested your strategy across 500 trades and you've seen with your own eyes that it wins 55% of the time with a 1.2 risk to reward ratio, suddenly every loss feels less personal. You know it's just part of the game. Here's a story. A trader once told me, before I trusted my edge, Every loss felt like a knife to the chest. But once I had proof, a loss just felt like paying the cost of doing business. That's the difference evidence makes. So how do you build bulletproof confidence? Here's the formula. Step 1, define your rules. Write down your entry criteria, stop-loss rules, risk percentage, and take-profit guidelines. A fuzzy system creates fuzzy results. Step 2, backtest relentlessly. Run your system across historical data. Track every trade. Record win rates, average losses, and average gains. The numbers don't lie. Step 3, trade small, trade consistently. Don't rush to get rich. Trade the system with tiny risk until the process becomes second nature. Step 4, scale only when discipline is automatic. Once you've proven you can execute flawlessly on a small account, only then should you increase position sizes. Confidence isn't a feeling. It's a byproduct of proof and discipline. When you trust your edge, you don't flinch when the market moves against you. You don't abandon your plan after 2 losses. You execute like a machine because you've seen the long-term results already. This is why professional traders look so calm. It's not because they're fearless. It's because they've already put in the work to trust their edge. And here's the exciting part. Once you've built that bulletproof confidence, you unlock the final stage of trading mastery, stepping into the zone where trading feels effortless, almost automatic. Entering the zone, mastering emotions for effortless trading. Every trader has felt flashes of it, the moment where trading feels effortless. You enter a trade without hesitation. Your mind is calm, your decisions are sharp, and it's almost like time slows down. That's what Mark Douglas called trading in the zone. It's the holy grail of trading psychology. But the big question is, how do you get there consistently? The first step is detaching from money. That sounds counterintuitive, but stick with me. When you see every dollar as survival, every tick feels like life or death. Your brain goes into fight or flight mode, and suddenly you're trading emotionally, not logically. Professionals don't see money as survival. They see it as points in the game. Just like a poker player doesn't panic over a single hand, traders in the zone treat money as numbers that reflect performance, not self-worth. The second step is embracing uncertainty. Most traders want to eliminate uncertainty. They want the perfect signal, the guaranteed setup, the trade that can't fail. But that's a fantasy. In reality, every trade carries uncertainty, no matter how perfect it looks. Traders in the zone don't fight that fact. They accept it. And when you accept uncertainty, you stop obsessing over being right. You start focusing only on execution. The third step is building rituals that anchor discipline. Flow doesn't happen randomly, it's created. Think about athletes before a game. They stretch, breathe, visualize, and lock into a rhythm. Traders need the same. Journaling your trades, reviewing your stats, meditating before the session. These aren't extras. They're the foundation of consistency. They quiet your mind so you can execute without hesitation. Here's the magic. Once you've detached from money, embraced uncertainty, and built rituals, trading starts to feel different. You stop forcing trades. You stop chasing losses. You stop panicking over noise. Instead, you enter a flow state where decisions feel automatic because they're backed by trust in your edge. Think of Michael Jordan taking a shot in the final seconds of a game. He didn't stop to overthink mechanics. He had put in thousands of hours of training so that, in the moment, his body simply executed. That's what trading in the zone feels like. You've done the work, you trust the process, and you just flow. And here's the beautiful part. When you're in the zone, the emotional highs and lows disappear. You don't feel euphoria when you win, and you don't feel despair when you lose. You simply log the result, move to the next trade, and let probabilities do their job. That is trading mastery. Not predicting the market, not catching every move, but entering a state where your actions align perfectly with your plan. That's the zone, and once you experience it, you'll never want to trade any other way. If this video opened your eyes, smash that like button to show some love. Drop a comment sharing your biggest trading struggle so we can tackle it together. And of course, hit subscribe because we're just getting started. Every week we're diving deeper into the psychology and strategies that turn traders into consistent winners. Don't just watch the markets. Master your mind, master the game. See you in the next video.